Hello, money miners. I'd say this is best episode of the year.
Back by popular demand, Matty.
Yeah.
It was a hoot last year. Everyone loved getting the succinct predictions from fundies for 2024, which has just been. Now, I've weighed up whether or not we keep them accountable or not, but I'll let people go back and listen. I did a scorecard up, but I feel a bit bad publishing it. But in general, there were some wins, some losses, but you know.
Is it being published?
Nah. But go back and listen to that one if you want to.
You
But
might be
yeah.
able to pay to get access if you really want it.
Nothing a brown paper bag won't fix.
Maybe. I thought the better way would maybe just release who sort of were the top ones.
Yeah.
And who weren't the lower ones.
Well, some of the fundies addressed their misses, in the conversations we're about to air, which was great. And we had so many, we've been so lucky to build relationships with a lot of fundies over the last 2 years that we've had a lot more contributions this year. I think we've got like 18-ish or something like that. So we've had to split them into 2 shows, Matty.
Oh, and what do you know? You're at part 1. That was the initial thing from a lot of them last year. Like, no, I'm not coming on because you'll fucking hold it against me next year, which is literally what could have happened.
Well, credit to them. We got a bunch back, and this is just action-packed. 5-10 minute blocks. I was just sitting there soaking it all in. So many different commodities, companies, thematics touched upon. So I think there's a lot of little sort of nuggets that you can sort of hear about and then go dig into in greater detail yourself. I loved it.
Just lay down the ground rules, the format, boys. There was a few
4
questions.
questions.
4 questions.
4 questions. Everybody got the same questions. We kept it pretty tight, not going too back and forth, just letting them lay out their thesis. Otherwise, we would have been here all afternoon. But the basic questions are to start with, what's your most high conviction pick? Could be thematic, company, commodity, anything. Then we had
Most non-consensus.
Exactly.
Prediction.
Followed by the commodity to perform best over 2025 and wrapped it up with the commodity to perform worst.
Let's get into part 1.
Here we go.
Roll them.
Sammy Berridge, thanks for making the journey downstairs to join us for our 2025 predictions after some of your great predictions last year.
Oh, thanks very much, Trav. Yeah, happy to come down and have another chat.
I think this is the first time we've got to do a ding, ding, ding on a fundie because Ali's actually put money into your fund. So she's winding up the ETF and it's going to Sam Barry. So ding, 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 ding on behalf of...
It's a warning to all the other fundies out there. They perform well. They get a big swab of capital coming after them.
Very appreciative to have Alex on board. And I think she's up a little bit from where she started. So hopefully the trend continues.
Alrighty.
Well, let's go into it with you. What is your highest conviction prediction for 2025?
Highest conviction, and I think it's something I've spoken of before, but it just keeps on getting, or the pricing keeps on getting better, and that's Metro Mining. The only bauxite producer listed in the world, as far as I'm aware, as a pure play. I was just flicking through the emails this morning, actually, and I see the price in Guinea is up another 6%, but then shipping costs have gone down, so the free on board cost is up like 9%. And so the margin expansion you get with these bulk producers is in dollar million terms is really quite spectacular when you start multiplying that through. And every bit of commentary I've read suggests that prices, are going to remain elevated for at least the first half of 2025. And then, we'll see what happens in the second half. But too cheap for where they are at the moment.
Beautiful, love it. Second question is, what is your most non-consensus pick for 2025?
I reckon we could see the Aussie dollar drop to definitely a 5 handle, but maybe even low 50s next year, which is just as good as commodity prices going up by the same amount for the Australian-based producers. Like, currency has a massive impact on earnings. So looking at the US, if Trump cuts taxes and starts imposing tariffs everywhere, that is going to be inflationary. It could slow down the trajectory of rate cuts in the US. Conversely, I think after the RBA minutes in December, there's suggestions that we could have a rate cut as early as February. And at some point, though, I think that we're going to have a succession of quite quick rate cuts rate cuts in quick succession, because the Australian economy outside of the government sector is rooted. Like, it is really bad and getting worse. And at some point, things will break. We'll get a succession of cuts, and we could see that currency down at circa 50 cents.
the best performing commodity for 2025?
Well, outside of bauxite, which I've mentioned, I think I'm going to have to stick with gold again. I think the beginning, or particularly the first half of 2025, is looking quite positive. I think it's all going to be about the US and what Trump does when he gets into office. I think tax cuts are going to be much easier to implement than cost cuts. So that means that the US fiscal situation will probably deteriorate initially, and that would be positive for gold. But then after, we'll see if Elon works his magic and manages to cut costs like he did at Twitter without sinking the ship. So, but that's going to be a second half story. So at least initially, I think gold probably does pretty well.
Yeah, eager to see that one. And lastly, what's the worst performing commodity for next year?
I think it'd be a toss up between oil and iron ore, I think. I might probably go with oil. It's up $70, $72 a barrel at the moment. There's a little bit of geopolitical risk creeping back into the price after Syria's sort of changed hands. But, you remove that geopolitical premium from the oil price, and so that's what it would be contingent on if things do settle down in the Middle East. There is a lot of spare capacity within OPEC+. BP came out recently in their Investor Day, said they're going to continue to spend and invest and increase production. Trump's very supportive of increased oil production. I just don't think, I think that global demand might struggle to keep up with it. And you remove that geopolitical premium for oil, and we're probably down at maybe $60 a barrel or thereabouts. So that would be it for the worst performer.
Beautiful, mate. We wish you a Merry Christmas, and thanks so much for your contributions to the potty this year.
Yeah, you too, guys. Always a pleasure. Thanks very much.
Sam Broom from Sprott, mate. First time on Money of Mine, but you're joining us for the premier occasion, the predictions for 2025. Thanks for dialing in.
Yeah, thanks for having me on, guys. I'm a big fan of what you guys do, so it's great to finally make it on.
Brilliant, mate. What are your highest conviction prediction for 2025?
Highest conviction. Given I do have some restrictions, I can't give you individual companies, unfortunately, but thematically, I think one of my highest conviction, what I tend to do, focus on a lot with clients, is the rare breed of companies, single asset companies with tier one assets. We saw this year, the likes of, Philo, Degrade, that just got taken up the other day. Even producing guys like Sentiment, Anglo came in. There are so few companies with tier one assets out there. I mean, I can probably count on one hand, maybe two at a push, companies that have those sort of assets that meet that criteria. I think if all you could do in 2025 is focus on those rare breed of really tier one companies with tier one assets, I think you'll do pretty well. I've made the mistake as well over the years of getting a bit cute on valuations, because oftentimes these guys do get, pretty lofty valuations. But they're just so rare that companies end up paying up for them. And I think that trend's probably going to continue into 2025. So that's my top highest conviction thematic for next year.
I like it, Sam. Next question is, what is your most non-consensus pick for next year?
Non-consensus. This one was... Yeah, I was trying to have a think of this one. Took me a little while to think of something, but I don't know what the sentiment's like back over there in Aussie and down under, but every man and his dog over here seems to be wildly bullish on the dollar, the US dollar under Trump, tariffs. But if you look at what Trump actually is saying and what he wants, and you look at some of his key appointments, like Scott Bessent, the Treasury Secretary, who's going to be taking over for Yellen, they are saying anything but, wanting a strong dollar. And obviously that feeds through into the whole commodity complex. So I think you might be surprised in 2025 that the dollar actually is much weaker than people are expecting. I'd be very surprised if the dollar is higher at the end of next year. So that's probably one thing. The other one, flirted with whether this should be a top pick for me, but I've been watching the PGE space for a while now, particularly platinum. I mean, I don't see anyone that really cares on PGEs, especially not from an investment standpoint.
We do.
You guys do, yeah. I have a hunch that poor old Platinum, who said, hasn't really had a bull market in 17 years, may well jump into action next year. So, Platinum.
Wicked. I like it. That might even feed into the next question, which is, what's the best performing commodity for 2025, Sam?
Good question. If history is a guide, the best performer is usually some weird, obscure commodity that has a tiny market and something flicks and it goes nuts. We just saw antimony, at the moment. It's kind of the hot thing. One that I've gone down a rabbit hole this year on that's got me reasonably excited is vanadium.
Yep.
Commodity that's been left for dead. The last bull market ended 2018 there. Steel demand is obviously still the main, it's a steel additive. Steel market sucks right now. No doubt about that. Demand picture isn't great. But one thing that's really taken me by surprise this year is the sheer number of announcements of these vanadium redox flow battery complexes that are in construction right now. This isn't permitting stage, thinking about it. This is actually breaking ground now. Like you can look at Ivanhoe Electric's, Robert Friedland's VRBF group just announced a couple of weeks ago that they're breaking ground on a 3 gigawatt hour facility in China in consortium with the Lubao group over there. That alone could require, 10 to 15% of global vanadium supply just for one project. Then you look at all the other projects that are supposedly broken ground or very close to it, and if a fraction of these, are come to fruition, it kind of looks like you've got a nice combination of a really depressed market where literally almost the entire cost curve is underwater here. You got guys shutting in, like the Bushveld, looks like it's on its way out the door. So you've got this ultra depressed market coming into a potential demand, an upward demand shift. I think there could be quite a explosive situation for vanadium. It could be one of those weird, obscure little commodities that goes bonkers next year. So we'll see.
Awesome. Keen to keep an eye on that one. And lastly, Sam, what's going to be the worst performing commodity of 2025?
This year's a harder one to ask that for. Last year there would have been a few more candidates, I think. I was looking around on my charts going, what's really ripped, and it's been a bit of a tough. It hasn't been an abysmal year, but it hasn't been. There's no sort of mainstream commodities that are other than gold. And as a Sprott employee, I can't ever say anything bad about a precious metal, and I wouldn't want to bet against gold either. But so I'm going to have to throw antimony out there as something that's gone absolutely bonkers lately. I think that with these things, there's usually a panic when these, trade restrictions kick in and then normality ensues. So going out on a limb, I think antimony might be in for a bit of gravity next year.
Beautiful. I like your style, Sam. Thanks for making the time and coming on Money of Mine.
Have a great Christmas, mate.
No worries. Yeah, Merry Christmas, guys. Thanks for having me on.
Rick Squire, thanks for making the time. To start us off, what is your highest conviction prediction for 2025?
Highest conviction, I'm going to go out on a limb with Petrotherm. It's a little explorer. They've got a project just out of Coober Pedy in South Australia. They've found a really interesting titanium-rich mineral sand deposit, and they've only drilled a couple of holes. Well, they've only released the results of a couple of holes so far into it, but it's unusually high grade. It's quite thick, reasonably close to the surface. It's got some really exciting sort of characteristics. So early days, but you guys seem to love those early, more speculative opportunities. So just thought I'd bring that to the attention of the listeners. So PTR is a thing, and just for full disclosure, we're substantial in that.
I saw you pop up.
Book there.
I did see that the other day. Yeah, no, it's a bolter. We haven't talked about it on the show yet, but keen to learn more about that one over time. And what about your most non-consensus view of for 2025, Rick?
Yeah, well, last year I made the prediction of my top pick was Meteoric, and that hasn't been good. But there's actually nothing wrong with the the stock. But in terms of the non-consensus view, is actually a rebound in the rare earth price. That rare earths typically they lead the decline of commodities into a recession, and then they also will lead the rebound that comes out the other side. So the rare earths, the NdPr price has been falling since early 2021. So it's actually been 3 years in decline. When you look at lithium, it's only been sort of 18 months to or so of decline. It's they've both been quite sharp and painful. But I reckon it's a non-consensus view that it will come out next year. So it's always difficult to predict these things. Can there be external factors? But a lot of supplies come out. Really good opportunity to rebound.
And there might be a bit of overlap on this one, Rick, but what are you thinking for the best performing commodity for next year?
Yeah, well, I like that lithium, but just as something different. I love rare earths, but I think lithium would be one that'll lift sort of for two reasons. Obviously, it's at lows. No one likes it. It's a very much unloved commodity. But what we've seen is a lot of supply coming out this year, but it actually hasn't. It's actually closures that we're seeing this year, but the supply hasn't come out. So these operations that have closed up in 2024, they're still shipping product even now in many cases, and it's in 2025 that we'll actually see the real curtailment in supply into the market. And I think that's the thing that will lift, particularly in the spodumene space, will lift the market. Now, how strongly it lifts is always the difficult thing to predict. But I think that's a commodity that could certainly lift off the ground, even if the demand stays the same. It's just that curtailment in supply will actually give it a lift off the ground.
Wicked. And how about the worst performing commodity, Rick?
That's a tough one. I'm an optimist, so I think they're all going to go up. But tough ones. I think nickel is the one that'll stay on the floor. So I just don't see the fundamentals for that look really tough. There's Indonesia is producing so much at such a cheap price to its peers that it's very difficult for producers to look past that. And because it's used as a byproduct with as an alloy in steel production, and it's just a small part of the battery use that the ESG story that gets wrapped around it. I just don't see that as being material when you look at the overall componentry of a battery, or the overall components of of steel, that where you get the nickel from. I don't think it matters so much to those purchasing the product. So I think nickel will stay on the floor, unfortunately, unless there's some unforeseen a factor that really changes the price.
Fantastic. Look forward to seeing how those picks go over 2025.
Big prediction for 2025. Grounded are going to build the Hemi camp for De Grey Northern Star.
You reckon that's coming in 2025?
They're going to start. They'll get the contract.
Right.
Yeah. That is my big prediction for Grounded.
That'd be the first contract I would sign if I was, managing the project, Northern Star and Hemi up there.
Yeah. De-risks it.
I mean, look after your people. Do the right thing.
Yeah.
My prediction is that the Grounded brand becomes synonymous with Louis Vuitton.
Yep.
It's that good of a brand. Yeah.
Yeah. But probably not with the price tag.
No. It's just you're getting quality. You know it's going to last. You know that they are just going to make you happy.
It's just, mate, all those G spots around the state are going to make you very happy. What about you, JD? What do you think the big prediction for Grounded is 2025?
The big prediction for Grounded. I think
JD, mate, you think off your feet. This is your forte.
I got a prediction, Matty.
Because JD's shit.
Just keep that quiet.
I got a prediction, Matty. Grounded will no longer be grounded. They'll be taken off. Yeah.
Is that right?
Yeah. They'll be in flight.
You got anything yet, JD?
Nah, I'm still thinking, mate. I'm working on it.
What is potentially a big project for Grounded this year. Think outside the box. Besides, so we've got Hemi. Where else do you want to see a Grounded camp?
Well, I want to see them everywhere. I want to see the mining industry get looked after, Maddie. So whatever you've got on your mine site, if it's not grounded, get rid of it.
I got one. This makes sense. Grounded is going to refurbish the Telfer camp. Because I've been there. That's pretty old. If there's a future for Greatland Gold up at Telfer, that camp needs to be refurbished. 700-man camp. Turn that into a Grounded camp.
That's a great one.
Yeah.
Like
Sean Day, give Paul Natoli a call.
Give him a Christmas present.
And Telfer it's pretty much one of the, because it's so far north, it's one of the closest mines in Australia to Sicily by distance.
Yeah.
Telfer's closer to Sicily than Perth is.
No word of a lie.
Yep. That's all we need to know. Go Grounded. And
Go
Grounded.
Rusty, mate, we're excited you can join us. Let's start this conversation with your highest conviction pick for 2025.
Sure. Thank you for having me, boys. Always love connecting, as you know. Highest conviction pick, I think you guys said this could be a thematic, a stock, or otherwise.
I've got one. Mate, my prediction is you'll get even more rogue in your dress wear in 2025.
That'd be pretty fruity. Maybe some actual dresses. That might be. No. So I have gone with a commodity actually, and I think you guys can probably guess where I'm gonna land. But I've actually picked PGMs and specifically palladium as our highest conviction prediction for 2025. I will asterisk that with there is a possibility that completely wrong because the timing is the hardest thing to point to with commodity markets and when they turn. But I would highlight that it trades deeply into the cost curve, consensus demand forecasts. They're underestimating the uptake of PHEV and REEV autos, both of which require catalytic converters. And you got consensus supply numbers, I think overestimating the quantum of supply that's coming from recycling. You got little to no incentive at spot commodity prices, as well as a higher cost of capital, so higher interest rates, which never work well for recycling businesses. So on top of that, stockpiles largely eroded. Positioning from financial participants is pretty set to the bearish side. So a whole range of things there to unwind at some point that will result in a higher palladium price in our view. And even if I'm wrong on a whole bunch of them, it's fundamentally unsustainable into the the degree to which it trades into the cost curve at the moment. So we like that. We like physical metal. You can do that with PALL on the New York Stock Exchange, and combine that with a mix of sort of producers and explorers for a bit of leverage. But that's our highest conviction prediction for 2025 is that we get a breakout in palladium.
Love the thinking, Rusty. What about non-consensus prediction?
Probably the same one.
Yeah.
Otherwise, I'll go with a gratuitous plug for one of our nearest and dearest holdings, and that is that Marley surprises to the upside. How about that for non-consensus? Because I reckon everyone's just got that as a complete uninvestable write-off. I think that obviously it hasn't been great to sort of see what's happened to the stocks and the people involved with the issues there this year. But equally, I do think it's a poorly reported and understood landscape. There are, I think it's well worth asking the question of a few of those companies that are producing there. Did you declare the correct status on your production? Did you declare commercial production, or did you not for 5 years? There is a bunch of things that have gone on in country, I think, that have precipitated where Marley's landed. And so I think some of the reporting's perhaps been a bit one-sided in that regard. I'm not advocating for detaining people on commercial disputes, but it is a sort of reality of the landscape there. And as I said, I do think it's probably poorly understood that there was some justification from government for that. So my non-consensus prediction is Smalley can turn the corner and Tabani will have a big rip on the back of it taken out, or they build something that's going to spew a lot of free cash flow. So yeah. Don't get any more non-consensus than that, surely.
Truly contrarian, Rusty. How about a best performing commodity, perhaps, putting PGEs aside for the moment? Yeah,
for Park Palladium, then this is a tough one because we are pretty cautious to pessimistic for the first half next year for the commodity price outlook more broadly. And that's just a function of sort of a trade posturing that we expect into the first half. And so I do think, you couple that with some softer data out of China and maybe some policy disappointments that we're already seeing filter through, then maybe it is a tricky first 6 months, more constructive thereafter, because we do think there's a sensible deal to be done with the US and China. But can't have palladium, then I'll take gold and tin. They're probably our two highest conviction picks. Now, do I think gold's going up, 40 or 50%? Probably not. But I think everything else, I think the broader space is quite exposed to a bit of a downdraft, and I think gold will hold its ground or better, because I do think we're in a fascinating paradigm for gold and its role in as a global currency. So high conviction gold and high conviction tin. So, I think you guys have covered that well, that space.
Speaking to my heart, Rusty. And what about the the most trepidatious view you have on a specific commodity? What's going to go down the most?
I reckon the easy money bet here would be aluminium, just because it's run so hard. So given that you get to walk through the whole of next year and then get to this point and have a conversation again, then maybe it's aluminium. But I don't say that with any real, supply demand analysis, just that we're well into, I think we're well into incentive pricing here, and
would you go,
commodity markets have a habit of
alumina or bauxite, or you'd go right up there?
Oh, great question. Probably up the curve. The bauxite side of things looks more constrained.
Yeah. And
then I just get lost in the fucking complexity of alumina versus aluminium. You guys probably way smarter than me being able to pull that apart. I'll just stick at the end.
Yeah.
At the end of that process. But I think that would probably be the easy. But otherwise, I do think iron ore tests cost curves is, it'll be a fair thing to see next year. We could easily see iron ore back 20% from here. And I know we talked last year around, like, I think our contrarian pick was uranium equities to come off, and I think we have seen that this year. I think next year could be interesting. Like, it's going to be really fascinating for uranium, and like we still own some physical and some Kazatomprom, but safe to say it's pretty under review. We've sold all our next gen. That's been really good. I do wonder. Commodity markets, equity markets are very good at pricing in future expectations. Next gen, I think, does come on stream. And at some point, market participants start looking at that and start thinking about that. And there's a lot of product to hit the market. So does that start changing habits? And if there's any sort of material sitting in stockpiles we don't know about in Russia or wherever, does it start to bring some of that material to the spot market ahead of next gen? Those sorts of things just rattle around in my head. So, I wonder, uranium's a really interesting one for next year.
Heaps for us to think about there, Rusty. Thanks for making the time. It's been awesome to chat again.
No worries. I was hoping you're going to pull me apart. I wanted some dissection.
We've got to keep it succinct for all of the different ones. But
I could
Cool.
could chat for hours, mate, on those ones. Very keen to get you on for a long form chat again when the time's right, mate. But yeah,
Sounds good, boys. Sounds great. Thanks very much.
Anthony Kavanagh from Chester Asset Management. Thank you so much for joining us again, mate. How are you feeling about your picks last year?
As I was saying, I actually got a Where's Wally outfit for the company KK, and I was tempted to come bring it on. So this is the thing, like, you make these predictions in the view of jest. Hopefully no one takes them too seriously, because it is a bit of fun. And the lithium one, I was like, spot $2,000 a ton. Oh, I should be wearing my Where's Wally outfit for that one. But like Henry Hub, I think you get the chocolates for that.
That was of the commodities picked for best performing. That actually was the best performing one. Yeah, I did the numbers. Yeah, that was a good pick. Well done.
that was a good one.
And the oil and gas one, it looks like I don't know what I'm talking about. But as I think I said to you the other day, there was a point this year, where I was privy to two different discussions that people were suggesting to me that there was three-way merger discussions between three of those four parties. And I was thinking I was going to look like an absolute genius rather than Where's Wally at this point. So I'll just say it could have looked really, really smart. So that's
Totally.
there.
Alrighty, well let's look forward now to 2025. What's your highest conviction pick, Cav, for the coming year?
And this, again, it's going to make me look like I watch too much Money in Mines, and I don't want that people to think that, even though I love the show. I'm very focused on investing, not just watching your show. But I would say I think this is a bit of a circular reference, and it is small cap copper. Mm-hmm. And I had a little bit of zinc in there as well. The thesis being that there's a lot of activity in the copper space. Obviously, the Widow transaction that you alluded to, Trav, that I think I was talking to you guys before that on, $2 billion Australian sets a pretty good price marker. I think the Rex Minerals deal earlier on in the year as well was pretty material. And I think it just opens up the door for some of those smaller cap copper names and assets that possibly slightly off the radar, but I think that they're going to see some activity in 2025. It wasn't just those two deals, though. Everyone we spoke to, so my colleague Rob and I were in Perth about 2 weeks ago, and literally every base metal company we spoke to, and even some of the golds, we're all on the hunt for copper assets. Like, everyone wants a copper asset at the moment. So I think we should see some activity in 2025 in that space. Now, always like to give a company name attached to it. There's one that I can't talk about right now, but for reasons that I'll hopefully provide to you in 2025. But there is one that I will mention, that's Develop. Now, Develop, I've spoken about plenty of times. It's had a bit of a challenge 2024, and that's despite Woodlawn getting closer and closer to production. It's kind of defied the Lassonde curve to a degree, because when a project's supposed to be within 12 months of commencing production, it's supposed to have a really strong period of outperformance. And I wrote a paper on this called Return of the Developer a couple of years back. So it's defied the Lassonde curve. I think copper prices should have a good period of it. I think TCRCs have probably been underestimated or overestimated, depending on how you think about it. Last year for zinc, they were, as high as $200 a ton in some contracts. I think they're going as low as $50 a ton in some contracts. That's pretty material to cash flow to these businesses. I think Woodlawn itself, like the management team has spent hours and hours, countless time ensuring this project ramps up. And you never want to say the project's going to ramp up with any risk, because I think you guys have said it before, there's no upside surprises in mining, only downside surprises. But I think if I'm ever going to bet on a project starting up without many issues, I think it might be Woodlawn in this instance. And so I think that Develop could have a good time with it, and hopefully I'll talk about a second copper company early into the new year with you guys.
We're keen to talk about that one in the new year, Cav. What about your most non-consensus call for 2025?
It'll be somewhat non-consensus, but it won't surprise anyone that I'll say Mineral Resources here. So it's a name that we've been associated with. I had a chat with an analyst yesterday who was telling me they think it's worth $38. I'd say I think it's still worth double that. Whether Chris Ellison is at the helm or not, I think the assets are worth a lot more than when they're trading. And hopefully sometime in next year we're seeing less and less of Chris Ellison and the MinRes team in the papers for the wrong reasons. I noticed FFG's kind of taken a bit of a beat the last couple of days, so maybe they've already switched targets already. But yeah, I'd say Min's over $50 by then next year. And whether it's the chairman being replaced earlier than people expected, or just some finality of whether Chris stays or goes by the next year, I think we can see Min over $50, which is over 35%.
Yeah, that's one we're definitely keen to keep watching, mate. How about the best performing commodity for next year?
Look, I could double down on Henry Hub because I think I said last year, because I rewatched it, that I think it's got 200% upside in it. It's only up 50% from that point. But I do like to bring something fresh. So let's say Henry Hub again, but let's also say coke and coal. I think that coke and coal at $200 a tonne is a lot lower than where I'd expect it to be by then next year. I'd say, 250 to 260 as a starting point. I think that part of the reason for that is India kind of had a prolonged monsoon season this year, so it kind of threw out some of the trade dynamics you normally see with coke and coal. For an added, even funkier perspective on coal, I would say that the coals that sit between thermal and met, i.e. your kind of PCIs and your semi-softs, I think they could even have a better time of hard coke and coal.
Yeah.
For the fact that maybe if we see a ceasefire in Ukraine, that some of the discounts start to unwind a bit because Russia's no longer selling cheap coal to China and to India. So I think coke and coal is a pretty good bet, and Whitehaven or stand by. I prefer Whitehaven, but I think both have a fair bit of upside in 2025.
I like it, mate. And what about the worst performing commodity?
Oh, I think I'm cheating a bit by saying this, but like bauxite and alumina. So let's say with alumina, I mean, it spiked recently for year end, so it's pretty to say that it won't be kind of close to 700 by the end of the year. And I know it's somewhat consensus, but I think by the end of next year, it could be close to 500. So what I am saying about alumina is maybe there's 30% downside from here in alumina prices, but consensus is still way too low. Like, so perversely, I'm saying alumina would be the worst performer, but it can perform a lot better than what consensus actually has. And I was looking at Bloomberg before. Actually, Bloomberg is literally suggesting that consensus alumina price for Q1 next year is below $400 a tonne.
Wow.
Which is just absurd. So despite saying that I think alumina could be the worst performing commodity with bauxite next year, I still think there's a trade in our coal or in South 32 in that, like, commodity prices stay a lot higher than consensus expects, and they generate so much more free cash flow in 2025 than the market expects. So there's one for you.
Fantastic.
Love it, Cav. Yeah, appreciate the calls, and wish you a Merry Christmas and look forward to doing this again next year.
Thank you, guys. It's always been fun, and I really appreciate being on the show. So let's do it.
Big 2025 prediction for Sandvik Ground Support is that there are going to be less MDX bolts being used because resin bolting is about to take off because of the styrene-free resin that doesn't smell. Gooey bolts are coming back. I think that's going to be a big theme for the Sandvik Ground Support division.
That's a big prediction.
Did you say happier underground miners, Matty?
No, I reckon. I reckon underground miners. They'd still rather jam an MDX in without than a resin bolt. But hey, if the cost is there and the health and safety is improved of underground mining because of Derek Hurd's initiative, you can't put a price on health and safety.
And speaking of the man, Derek Hurd, check out this photo.
Have a look at him. Isn't he in the spirit of Christmas?
Festive spirit.
Go, Derek Hurd. And, mate, Sandvik, as I've said, you better be looking after Derek Hurd now that he's got a Sandvik badge on because we love him dearly. We just hope he's getting the treatment he deserves because he's the heart and soul now of Sandvik Ground Support Division. Derek Hurd, thank you for having us in your family.
Give Derek a call. Get your order in.
Get some Sandvik Ground Support in your underground family.
Make it
for
a crack
Christmas.
in 2025.
Mate, put some resin on your Christmas tree.
Yeah. Hey, you wouldn't even know it's there because it doesn't stink. But you will see it.
You can't really miss it.
No, that's actually not a bad idea. Just wrap the resin that's actually, I'm going to do that.
Yeah.
Derek Hurd's probably already done it for Christmas. His kids love it. Go Sandvik. Thank you very much for your support this year.
Juddy, thanks for making the time. Let's start this one off with your highest conviction pick for 2025.
Our highest conviction pick is a stock we've liked for a considerable period of time, and that's Visan Asset Management. It's a diversified water services business based out of Western Australia. They've got a range of water businesses from engineering, consulting. They dewater a lot of significant iron ore deposits that are under the water table in WA. But the business we're most excited about in calendar year 25 that we think could lead to a re-rate is their Visan Asset Management business.
Huge. I'll have to give it a ding, ding, ding. I'm a shareholder of that one.
And mate, what about your most non-consensus pick, Juddy?
Our most non-consensus view is probably around US interest rates. Consensus has them to be under 3.5%. by the end of calendar year 2025 from a bit over 4.5% now. And we'll take the unders on that. We think the US economy is going to be really strong. We think tax cuts will be implemented soon after Trump's inauguration. And that coupled with deregulation and increased investment into the US, largely around the threat of tariffs. We don't think tariffs will be as scary as the threat of tariffs. We think tariffs would slow the economy and create a type of inflation, if you like, from one-off cost increases. But we think the US economy is gonna rip. We think Trump wants a roaring 20s type economy, and we think there's a fair chance he may get it. So we'll take the unders on interest rate cuts in the US for 2025.
Beautiful. And moving to the commodity end of the world, what's going to be the best performing commodity over the next year?
Look, it's already done really well, and you guys will be far better placed than me to answer this question, but I still like uranium. I still think there's some catalysts that can create a bullish market for uranium. It's done a bit of work here, but if you can get some changes around processing of uranium and get those changes coming in the new year, we still think that's a huge long-term macro trend that's going to be with us for the next 5 to 10 years.
Like it, mate. And what about the flip side of that, the worst performing?
Oh, we're not ultra bearish on it, but we don't have any exposure to iron ore, and we don't desire any. We think we think the Chinese are going to look to stimulate their economy, but we think that stimulus will be really designed around increasing consumer spending. And so we don't think they're going to continue to build out apartments at the rate they have. And whilst there are other areas in the world that will be increasing iron ore demand, we don't think that's going to make up for the change in the Chinese economy.
I'll tack on one more quickly at the end there. What do you reckon that means for the Aussie dollar over the coming year?
We think the Aussie dollar, we don't think it's going to strengthen considerably. And that's probably the changes. The main change we've had post-Trump's election win. Post-Trump's election win, we thought his deficit spending was going to be bigger than Carmela's, and we thought the US dollar was going to soften. But we just think there's so much excitement around deregulation, tax cuts, and we think the US is essentially going to suck in a lot of capital, driving their dollar up. And so that, coupled with potential China weakness, we think the Aussie dollar is going to find it hard to strengthen considerably from here.
Beautiful. Great to hear your predictions, and we look forward to seeing how they go over the next year. Thanks, Juddy.
Thanks, gents. Good luck.
Dave Franklyn, thank you for joining us. We'll just get a quick ding, ding, ding out the way. Our Ali GC is a unit holder in your funds. So let's start this conversation off, Dave, with your highest conviction pick for 2025.
Yeah, look, our highest conviction is we think that lithium prices have bottomed. So, look, at current spodumene prices around $800 a tonne, really no one's making any serious money. We think that there's no incentive to bring on new projects, and the majors, MinRes and Pilbara, have announced cutbacks in production. So I think they're all signals that we're bouncing along the bottom, and I think as we move into next year, we'll see some opportunities in the lithium equity space.
Nice, Dave. What about most non-consensus view for 25?
Yeah. Look, non-consensus, we're going for a recovery in rare earths prices in 2025. Ooh. The sector's been hammered, has been a very poor performer over the last year. It's a difficult sector in that it's dominated by China on both the production and processing side. But we just think at these levels, it's likely to bounce over 2025. We're particularly interested in the Brazilian ionic clays. We think that's a possible low-cost source of production going forward. So looking at companies like Meteoric. But I think it's a bounce in rare earths is what we see next year.
Fantastic. And maybe if we put rare earths aside for the moment, Dave, have you got another best performing commodity for the coming year?
Look, we do. So look, we're tossing up between copper and uranium, but you also can't rule out gold. But we've narrowed it down, and I think copper. Look, the risk is what happens with Trump and China stimulus, and it kind of could go either way. But in general, we see growing global growth next year supporting copper. On the demand side, you've got the electrification sort of tailwinds, which will continue to grow. And on the supply side, you've got 40% of copper coming out of Chile and Peru, so always chances of supply disruption. So copper is the one for us.
And on the flip side, Dave, what have you got the most bearish outlook from a commodity front?
Yeah, the worst performing. Look, we generally think the commodities are going to bounce a bit next year. The one that we think looks pretty bad is cobalt. Going back a couple of years, it was the flavour of the month with energy transition. What we're seeing now is just a massive increase in supply coming out of the DRC in Indonesia. And on the battery side, a shift to LFP batteries building market share, which doesn't help their demand profile. So cobalt, you don't need it.
Fantastic. Short and sharp, Dave. Thanks again for making the time. And we're looking forward to seeing how those predictions go in the coming year.
Great. Thanks, JD. Thanks, Trav. And all the best for next year.
Will, thanks for making the time and coming on Money of Mine again. I am excited to hear your highest conviction pick for 2025.
Yeah, thanks for having me, guys. For us, it's junior gold. So we've seen a bit of momentum in that trade the last 3 to 6 months, which has been great, and then a few absolute rippers over a longer period of time. But we still think that it just has not kept up with the greater gold price environment, as well as the large caps where there's been a real bifurcation in terms of the share prices versus the fundamentals on those fronts. So really, really excited for gold. We think there's been probably a bit of non-fundamental issues with that trade, such as greener pastures in tech and biotech and crypto and the like. And so we do think that we can get the trade coming back through there, and could be a really good 2025 for the juniors.
Awesome, mate. What about non-consensus view?
So hopefully we'll please a few people here by saying electrification minerals, I think they get back in vogue by the end of next year, and we can talk about lithium in particular. Clearly, it's been on the nose and for very good reasons, probably just supply just starting to just outstrip that ability for demand to keep up with it. But we think Chinese stimulus, and particularly they're focusing on that tech side of things, on the EV side of things. And so we think, that will lead to a bit of, that demand trade coming back, as well as we're well into cost curves now. So something does have to give. And as we all know, lithium moves quite jankily and can move up as quickly as it's moved down. So, yeah, we think by the back end of next year, we'll see some green shoots there.
Great. And maybe if we take a little pause on lithium, have you got another one that might be the best performing commodity for next year?
Yeah, for us, it's tin. So we've liked tin for a while, and it's been a pretty healthy pricing environment for that commodity, but it's a really small kind of volume market, as you know, and it's dominated by, some unreliable jurisdictions, China, Indonesia, Myanmar, about 70% of supply. Tin, 50% use is solder. We expect a huge increase in electrification, data centers, computing, etc. All going to need tin, and that supply is just not coming online. Saw an absolute burst in the price 2020, 2021, above $50,000 per tonne, and we think that can happen again, and hopefully in the near term.
Beautiful, mate. And on the other side, worst performing commodity.
Yeah, a bit boring here because, I'm a glass half full kind of guy. So, hoping for a good year across the board. So probably going to go for a commodity, which I expect is probably going to track more sideways. That's nickel. Just looking at the demand supply dynamics there, and just the issues we've got with Indonesia just absolutely, coming out of nowhere on the ability to do the HPAL for the electrification or the battery grade nickel side of things. I just think we have a couple of years of that just working through before we're really getting back into the territory where we need to turn on some of the other nickel production facilities. So yeah, just a boring year rather than a seismically bad year for nickel.
Fantastic. I think you'll make a few friends with your tin and lithium picks. Thanks for coming on Money of Mine again, Will.
No worries. Thanks a lot, guys.
Romano Salatena, thank you so much for joining us for the predictions for 2025. Your episode was super popular with the listeners of the show, so we're eager to bring you on to bring out the crystal ball. Kick it off. What's your highest conviction prediction for 2025?
Yeah, I think that's probably the easiest question you're going to ask me. For us, it's clearly mineral resources. MinRes had the year from hell in 2024. You had the perfect storm of the convergence of governance issues with weak commodity prices, with, a record debt stack. But I think investors have to remember the reason the debt did get so high or is so high is because they've also had the highest growth in the history of the company. And, the Onslow Iron Ore project, which is on track to do 35 million tonne per annum annualised June 2025, that's a game changer for MinRes. And unlike a lot of mining companies, they clip the ticket every single point along the chain, including the port. And there's no other mining company in Australia that does that. So I think MinRes is our highest conviction for 2025.
Beautiful. How about your most non-consensus pick for 2025, Romano?
Yeah, I think that's that banks and tech roll over at some point, and that money is used to fund the resources the trade back into resources. We're probably higher conviction on the view that banks will almost certainly roll over at some point. Tech's an interesting one because it has got genuine earnings growth and it's got growth plus defensive qualities. But nonetheless, I think both those sectors, we've seen a couple of tremors over the last sort of month or so where people have been a little bit nervous as China's come out and said they're going to stimulate the economy. And we've seen how quickly banks and tech can roll over to fund that trade into resources. So I think at some point, it's probably going to happen, latest January around the period of inauguration as Trump comes into office. The Chinese have signalled what they're going to do. They just want to see the specifics before they actually pull the trigger.
Interesting, mate. I like it. Banks, CBA's just doesn't make any sense, does it? But what about your best performing commodity for the year?
There's a few that could put their hand up for it. And gold, I think you can certainly still make a case that gold is going to be strong, despite what everyone's saying. It's the technical price action still very good. It's respecting the trend. And, you can make a case fundamentally, with China back in the market now for the first month in 6 buying gold. People don't want to get stuck holding the US dollar when it does finally crack. In fact, any fiat currency. So gold's really the only alternative. Bitcoin sort of staking a claim a little bit to being an alternative to gold, but it's a long, long way from, being at the same level. So I think, gold is a possible. But I think the one that really stands out for us is met coal. I think people have lost perspective on just how much met coal India is going to need over the next, 1, 2, 3 decades. And they've also lost perspective that, in terms of exporters into the seaborne market, there's Australia and there's daylight. So we are the go-to for met coal production. At the same time, what are you seeing in Australia? You're seeing higher costs. You're seeing unilateral royalties being imposed. You're seeing, the environmental groups work very aggressively to stop all new mines, especially coal. So at the same time as you've got this pronounced demand increase, which we've got a fair bit of visibility on. At that same time, the largest exporter is undergoing a whole raft of issues, which will not only slow an increase in supply, but will actually threaten supply at these current levels. So I think met coal's a standout, and within that space, Whitehaven is the standout stock. That transaction they did when they bought Daunia and Blackwater from BHP, to double their production, add 150% to revenues plus, and to do it without issuing any shares, that's a game changer. So once we get through the digestive phase, I think you'll see a strong re-rating in Whitehaven.
I like it, Romano, and not the first met coal pick we've had today. Last question, what will be the worst performing commodity next year?
Well, I think that's the hardest question. I think 2024 was pretty much horrible for every commodity with the exception of gold and silver. Even platinum and palladium, and normally, when gold and silver run, the other precious metals do too, but even platinum and palladium have just had a horrible year. So I do think that the risk at the moment is to the upside for most commodities, not the downside. And we would find it very hard to pick a standout commodity or standout underperformer in 2025.
No pick.
No pick. Bold. All commodities go up.
pick.
I like it.
I love
Well,
the
I think-
contrarian nature
I think
of it.
risk it to the upside. I mean, obviously all commodities won't go up.
Yeah.
But, in terms of as you sit here and you try and think, well, what's your highest conviction downside? There's nothing that's a standout in terms of downside. You could maybe argue uranium's still got further to go because the demand, is still a little way off cutting in. You could possibly make a case for iron ore, but I still think that's probably 12 to 24 months premature. And again, calling the death of iron ore has been the widowmaker trade for the last decade. So, I think at the moment there's nothing that we follow that's a standout to sort of have a big decline in 25.
Appreciate the calls, Romano, and look forward to having you back on the potty early next year.
Yeah, thanks for having us, and good luck over the coming 12 months.
Cheers, Romano.
How good was that?
That was like I'll bring it up on I'll screen record this off YouTube, like the Riddler when he was taking in all the information in Batman Forever, I think it was, like just the knowledge of the whole of Gotham just coming in. That is what you just got, Money Miners.
Amazing.
Massive thank you to all the fundies for, again, letting us borrow a bit of their day and just sharing their wisdom with us.
Can't wait for part 2 tomorrow.
Well, I was about to say, the best thing, you get to do it all again tomorrow, Money Miners, because you're going to get part 2 straight into your melon. Lucky you.
Lucky you. And
what a world we live
lucky
in.
us for getting to partner with these fantastic
companies. I can't believe I don't get to talk about them for 4 weeks while we're off. This is upsetting me. So I'm going to say it.
Go for it.
With special attention to Mineral Mining Services, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, Daishsat, Saltbush Contracting, and don't forget to get wet.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.